Hello, YouTube, and welcome back to this dividend growth fund strategy thingamajig. This channel is covering a dividend type of stock strategy. This is not financial advice. I'm just trying to show people one strategy of many that can be done with a portfolio. So it's the end of September, and we have a September update. This is our chart right here with the different months. We started in April, and in April we made $9.05 in dividends, and we've been growing since then. We knew that we knew that August would be kind of like larger than normal because of one of the funds we were trying, but we're still on generally an upward path, and I think by the end of the year we might break. I'm pretty sure we're going to break $200 a month. So our total dividends for the year since April is $620, and we'll go over some of this. And for September, we brought in 173.56 alone. And just to show you again, on the left side, these are the monthly totals. This is just for the month. We had a $105 dividend in August that I think threw things off a little bit. We're not going to see that again. That fund was kind of too risky, and we left it and just kind of said, so we kind of broke even, meaning the fund dropped by about $105, but we got a $105 dividend and then we got out. So that's why August is higher, but we're out of that. We got out of that in August, so September does not contain that. And yeah, just to show you, we're going to go over many of the funds that are held, and this is just one way you can do things. And for example, this is from Robinhood, the dividends that are coming out. So we're just covering September. September is over, and yeah, we have some that are less than $1. And then we got, like a $6, $1, a $2, $11, $12, a $32, $9. These have been rolling in all through September. $9, $2, $16, and they're just coming in September 8th. September 8th, $4. September 8th, another $4. So these just basically roll in all month long. September 5th, $7. September 5th, another $2.79. So these are just coming in from these different funds all month long. I'm kind of doing a quick and dirty little graph here to show the progress, and I put all the dividends in this Excel. As you can see, we've also increased the number of actual payouts, even compared to last month. So I don't know, I guess I can add these up. Will it tell me? It says the sum is 173. 27 individual dividends. And we can see the average. So 173 total. So if we do 173 divided by 27, so our average dividend is $6.40. And the other thing I like to look at is 173 divided by 31 days in a month. So right now, we're averaging $5.58 a day. Talk about passive income. This is really cool. This is really cool to me. By growing this fund, And so far, $620. Um, and this is not even a whole year. So let's say we do $620. Let's say we do 170 through the rest of the year. So plus 170 for October, plus 170 for November, plus 170 for December. So we should end the year up $1,030, which is pretty cool. And I'm actually expecting this to grow more. I think we're going to come in at about 1,200. And if I think we're gonna really, I mean, the goal is really $300 a month right now because I want to do, let's do $300 a month divided by that $31 a day. I want to get to about $10 a day would be pretty cool because that's $70 a week. And but let's say we get to our first mini goal of the actual steady, like $200 a month times 12 months. You're talking $2,400 a year. So if this keeps going, hopefully by starting next year, we'll get a full year of this instead of just starting in April. And these, as you can see here, these all say, what do they say? They say reinvested, reinvested, reinvested. Okay, so what's going on is this $9, this $8, right? This $2, this $16, they buy back into the funds. They buy more shares. So it should be creating this snowball effect that we want. So let's take a look. Anyways, that's September. It's the end of September, and that's what we got going. And let's take a look at the different funds, and I'm just gonna do an average on the yield for all these real quick. So this is one of my favorites here. It's CLOZ because it should stay really steady. So CLOZ is I'm just going to average these to make it real quick, but the yield is about 8%. I'm going to mostly ignore the expense ratio, which you do have to consider, but just for averages and to make this video a little shorter. So CLOZ is about 8%. So let's put these in here. Where is CLOZ? Okay, it's right there. Let's get this. 8%. Let's go up to 36 size. So our CLOZ is about an 8% yield. And let's start at the upper left after this. JEPQ. Can end up with too many tabs. JEPQ is about 11%. So this is the total for the year. I'm spreading these out among different funds. QQQI, 13%. If you have some funds that I'm missing that you think might be good to add, feel free to let me know and I'll take a look at them. I want to spread amongst different risk amounts. Some are lower risk, some are higher risk. And this way, if something happens in like a particular sector, then the risk gets spread around. GPIQ is about 9%. It's like 9.9. So let's do 9%. This sort of average everything out. SPYI, about 11%. So these are great, and they're being pretty healthy. So yeah, once again, these dividends, they go back in to buy more shares. So get that snowball effect. SPYT. Might have to look some of these up. SPYT. Oh my goodness. This is 20%. Wow. Incredible. 20% dividend per year. JEPI. Because you might be asking, why not just put everything in the 20% or everything in the 13%? And the reason is because there is risk management going on. JEPI is about 8%. Again, this is part of a larger. This is just one strategy for maybe part of a portfolio, but I have some other different risk allocations and different things, and I wanted to see how this would work to kind of supplement another strategy, and became interested in, what would it be like to have a fund that was just dividend focused. JAAA. This should be lower yield, but a lower risk. I think this might be my lowest yield one. It's like 5.5%. But basically, the thing about this one is it basically shouldn't move and shouldn't have any troubles if the market goes down. So the shares here, they're buying back in. It's called a drip strategy, where it buys the dividends, buy back in and buy back in. SPHD, not a lot of shares of SPHD. Also a lower yield one. SPHD. This is not everything. I've covered more of the holdings in another video, but want to make this one. So actually, this is the lowest yield, but this fund should follow the overall market closer with a lower yield. This is a really popular dividend type fund. We'll call this 3.1%. But very, very small part of this larger portfolio. JBBB. And this is 7%. 7.3. Cool. So this is not every single fund. These are, but quite a number of the funds that are being held. So we've got some lower risk that are lower yield, and that's these numbers here. This is the dividend return over a 1-year time frame, and then some of these are just doing incredible. They're having growth and they're paying these dividends. So this is where our chart looks today, and if this keeps going, our total by the time we get to the end of December should be at or maybe even break $1,000. Maybe we'll hit 1,000 by the end of December, and then the following year we're just really off to the races, and we'll be comparing what that looks like. And thing is, this is just as far as like passive income and making one way of making money work for you in a way that takes almost no effort. Um, this is working out so far, and uh, I'm pretty new at this, but I'm liking where it's going, and it's definitely the psychological effect of seeing these dividends come in day after day and week after week um, is super helpful. Um, just as far as feeling like keeping this going, um, and the ability to, for example, like turn off the drip. I mean, if this was 10 times as big, imagine you just move this decimal over one. Um, if this was 10 times as big, we'd be at, $1,000 a month. And getting there means potentially even just turning off the drip if I want the income to do other things, take, sabbaticals or breaks on work, and then long term, um, either being able to fund other hobbies, emergency funds, stuff like that, make car payments, uh, whatever whatever your situation is. I just want to show this strategy not as financial advice, but just as to show that we can build this up and um, get this snowball effect to something that is, substantial. So that's it for the video. That's the September. If you want to keep following this portfolio and see where we go and see if we did remove a fund, we've added a few other popular dividend funds. I didn't put, again, like, for example, yeah, where is it? Like SPHD, I also have SCHD. Um, there's a reason I didn't go after these, especially at the beginning, because I thought that the dividend payout is too small for what I'm trying to do. I don't like this 3.1 or like even the 4% dividend with all the fluctuation. JAAA is my other bigger compromise, but the fund itself should basically not move and just have the dividends pouring back in. CLOZ, on the other hand, and JBBB, they're safer. They don't have these huger dividends, 11 and 13%, but they're kind of safer. I've seen a strategy where you don't have the drip from those go like back into the fund, but you have the drip go into like other funds, which is like you have your drip from CLOZ, which is very safe, helping to buy other funds. I wouldn't be called drip at that point, but you get the idea. So you can use these ones that are more stable to then accelerate the growth in other ones. Maybe I'll try experimenting with that at some point, but this is the growth so far, and we'll keep going. And if you want to stick around and see where we get in October, if we can hit the 200, let's see if we can hit the $200 a month then we do divided by 31 days. Yeah, we're looking at bringing in $6.45 per day, or $45 a week, um, just by holding money in these places. Um, I've been able to grow this pretty quickly by doing it aggressively. Not everybody's going to be able to grow it as aggressively, but even from April to May, we went from $9 a month to $15 a month, pretty quickly. So these do start to add up, and as the dividends, this is really a time thing, right? If you imagine being able to do this over 10 years, right? That's partly what we want to think about is, this is just over a 1 year time period, but um, you have time, right, to grow this. And if you have time, if you do this for 10 years, if you do this for 20 years, the compounding effect can really be substantial. I personally am not, and would only want to do this purely as like a retirement or investing strategy, but part of one. And I wanted to see, does this actually work? So that's the video, and we'll see you in October.